It was a bit of a rude shock for me when, after my first year here, I was told I was owing HMRC an additional £3,000 for taxes that were not deducted from my salary during the year. At the end of the day, whether you outsource or you handle it yourself, HMRC will always hold you responsible for your taxes. Hello everyone. My name is Modupe, and today we'll be talking about UK tax basics. Everything we cover is for education only, and it's not meant to be taken as financial advice. If you do need financial advice, please consult a licensed professional. So we've established that wealth is as much about how much you keep as it is about how much you earn. But that only works if you stay on the right side of the rules. Because HMRC mistakes are not like bad investments. They won't recover over time. They usually come with penalties, interests, and a lot of unnecessary stress. So this was one area that I had a bit of challenge with when I first moved here. Back in Nigeria, as an employee, you hardly had to worry about your taxes. Most employees had their tax obligations deducted and paid by their employer. You didn't expect a scenario where at the end of the tax year, the tax authorities would come back to you and inform you of some tax bill aside from what had already been paid by your employer. So it was a bit of a rude shock for me when, after my first year here, I was told I was owing HMRC an additional £3,000 for taxes that were not deducted from my salary during the year. The truth is this: most people don't get in trouble with HMRC because they're trying to cheat the system. Most people that get in trouble with HMRC get in trouble because either they didn't realize they needed to declare something, or they misunderstood what would be taxed automatically, or maybe they received an email or a letter from HMRC and didn't understand exactly what it meant or what they were supposed to do about it. So today, we'll be looking at how I try to stay out of trouble with HMRC and where to find help when you are not clear. Let's set some expectations. Don't expect to understand the entire UK tax system in one day. It's not going to happen. Our focus for today is to know what needs your attention and where to get help for the rest. The other reason this is important is because at the end of the day, whether you outsource or you handle it yourself, HMRC will always hold you responsible for your taxes. Even when you employ a tax accountant and you let HMRC know, you're still held accountable for whatever information they submit on your behalf. So it's good to understand a few basics. For you to have an understanding of how much you owe HMRC, you need to first of all know what your total income is. Beyond your monthly salary, there are other things that you benefit from your employer that HMRC also expects you to be taxed on. So when we speak of your total annual income, that would include your salary, bonuses, as well as allowances. For instance, you relocated from one place to another and your company gave you an additional sum of money to assist with the relocation. It could be a car allowance. Maybe your company gives you some additional money to either get a vehicle or as a cash compensation for you not having a company car. So the tax year usually starts from April 6th and ends April 5th of the following year. So we are currently in the 2025-26 tax year, which started April 6th of 2025 and will end in April 5th of 2026. The tax year before that was the 2024-25 tax year, which started April 6th of 2024 and ended April 5th of 2025. Usually, there are two forms that your employer would send to HMRC. One is called the P60 form, the other is a P11D. HMRC would get the P60 and P11D forms from your employer after the tax year has ended. So that is when they get a full idea of what you actually earn within that time period. The taxes would have been deducted from your monthly pay based off an estimate of what they expect you to pay. But depending on the actual figure on your P60 form and the P11D, that gives them a full picture of how much your employer spent on you in that tax year. And that's what's used to determine how much you were meant to have paid in taxes. Now, aside your salary and your bonuses and allowances from your employer, you also have things like any rental income. So if you own property and you're renting out some rooms, that's part of your annual income as well. And then if you have any dividends that are not within an ISA, that also forms part of your income. If you have a side hustle or freelance work, or you put some money in a savings account and earned some interest, or you sold some crypto, whatever income you received is considered to be part of your annual income. If you also had any income from overseas, say you received a pension and was transferred into your account here, it's also considered income. Now, not all these taxes are treated the same way. Depending on the tax rates may differ. In some cases, you may not even need to pay tax at all, but the HMRC wants to have a full picture of what your income was. And from then on, depending on the nature of the income, the tax obligations are now determined. Something else that affects how the tax obligations are determined for each income type is your tax band. Now, on tax bands, you need to understand which tax band you actually fall in, because that also affects how each of those income types will be taxed. Now, for those of us living in England, there are 3 bands as of today. You have the basic, the higher rate, and the additional rate band. Now, these may vary if you live in other parts of the UK, but the principle remains the same. You have tax bands, and depending on your tax bands, your different income sources are taxed differently. As of this year, 2026, if your total income, everything we mentioned earlier, salaries, side hustles, allowances, bonuses, rental income, dividends, if your total income falls below £12,570, then you pay no taxes as of today. If it's between 12,570 and up to 50,270, then you are a basic rate taxpayer. That's your band. If it goes beyond 50,270 all the way to 125,140 per annum, then you are a higher rate taxpayer. Anything above 125,140 pounds per annum puts you in the additional rate tax band. Now, these bands could move up, they could move down. It's about the principle. For now, based off the last budget announcement, the bands in England have been locked all the way till 2031. Now, we discussed some tax allowances yesterday. Things like how much you can earn on interest, on dividends before you have to pay taxes on them. So your tax bands also affect those, because a lower rate tax payer can make up to £1,000 in savings account interest before they need to pay any taxes on it. But a higher rate taxpayer can only earn up to £500 on their savings accounts interest before they need to declare taxes. Now, the other thing to keep in mind is that the tax percentages that you pay also vary depending on the nature of the income that you earn. For instance, anything considered to be income tax, your salary for instance, is currently taxed at 20%, 40%, and 45% for the 3 tax bands. That doesn't mean a higher rate taxpayer pays 40% on all their income. It just means their income that sits above that threshold of 50,000 is taxed at 40%. For the additional rate taxpayer, any income they make above the threshold of 125,140 is taxed at 45%. And of course, for the basic rate taxpayer, anything they make above £12,000 is taxed at 20%. But your tax on dividends is treated slightly differently. So while income tax is 20%, 40%, and 45%, dividend tax is 8.75% for the basic rate band, 33.75% for the higher rate tax band and 39.35%, close to 40% for the additional rate tax band. Now, all these figures are correct as of today, but always check HMRC website to be sure that you are working with the latest information. In general, though, the higher your tax band, the higher the percentages you pay on the different income types, even though it may vary. One other thing to note about income tax is the 12,570 tax allowance. Because if you earn below £100,000, usually the first 12,570 is disregarded. You don't pay any tax on that. Anything above 50,270 up to your salary, which is lower than 100,000, is taxed at 40%. When your salary crosses 100,000, then the whole mix starts to be treated differently. For every £2,000 that you earn above 100,000, if you earn 102,000 pounds, you will lose £1,000 of that £12,000 allowance that you had that was tax-free. The way that reduction in your tax-free allowance, the way it works is for every £2,000 you earn above £100,000 every year, it shifts £1,000 from your tax-free allowance into your higher tax band, not into the basic rate tax. If your salary continues to go above £100,000, for every £2,000 that you earn above that 100,000, you now need to pay an extra £1,000 at the 40% rate. So your cash-free allowance reduces, your 40% rate of tax income increases. So for someone earning, say, £110,000 per annum, they would pay 20% on that £37,000 between 12k and 50k. But because their tax-free allowance, that 12,500 has now reduced by 5,000 because they are earning 10,000 above 100,000. Now they need to pay 40% tax on that 5,000 as well as 40% on everything above 50,270. You see, this calculation seems complicated, but the honest truth is, if you just put in your numbers on the HMRC website and you follow the step-by-step instruction, usually it's pretty straightforward to follow. Now, one more thing you need to understand when it comes to taxes is what's taken at source and which ones you have to declare. Typically, your pay is deducted at source. Your national insurance is taken from source. Anything beyond that is usually not. And in some cases, not even all of your pay is taken. If you get bonuses, if you get allowances, because what happens is HMRC would set your tax code depending on the income that they estimate you will earn that year, and your employer now deducts the tax from source based off the code that HMRC gives them. In some cases though, HMRC might just estimate that you earn a lower amount this year than you normally would earn and give your employer a code that allows them to deduct less than they normally should. Meaning by the end of the year, you get a tax bill, because when they eventually now send the P60 and the P11D forms to HMRC, and HMRC sees exactly how much you were paid by your employer, then they now say, okay, this is an additional amount of money that you need to pay. There are two ways to handle this. Either you plan for it, meaning you assume it's a loan from HMRC if they're deducting less than they should, and you put that money in a savings account somewhere where at the end of the year, when HMRC comes calling and asks for the extra money that they didn't collect earlier on, you have it set aside. You can give it to them by the end of January. Either you treat it that way, or you go more proactive and you reach out to HMRC, and you can either send them an email or go reach out to them on their website and say, this is how much I expect to earn, especially once you cross that £100,000 boundary, because in most cases, HMRC continues to assume you have a tax-free allowance despite the fact that it's already reducing once you cross £100,000. So sometimes it helps to just let them know, you know what, I'm not going to have a tax-free allowance this year. You need to correct my tax code. I won't go into tax code in this class, but you can search for it in Google. There will be a ton of other sites explaining stuff. But I think the source is usually clear enough, go to the HMRC website or gov.uk website. The reason is it's always updated. Unlike other sites, someone like me could just put out a blog post and forget to ever go back and update the details. And because these rules change frequently over time, you want to always make sure you're working with the latest set of rules. So when I search for information on taxes, on tax bands, on tax allowances, on codes, I always prioritize looking for the latest information on HMRC. If I can't find it on HMRC and I'm forced to check some other website, I read through what they put, then I use that as my search term to search the HMRC and gov.uk website. If I still don't find the information there, we'll talk about how you can reach out to HMRC in a bit. But remember, things like capital gains from selling any investment you have that is outside an ISA, that is not in a tax wrapper, you need to declare it yourself. Your employer is not going to declare it. HMRC may find out later and charge you a fee, so you need to declare it. Interest from savings above your allowance, you need to declare it. Dividend income, you need to declare it. Your employer is not going to know all those things. And HMRC will not ask on day one, but they may eventually find out. Any other side income you do as of today, if you're earning below £1,000 on side income, usually you have that allowance. Again, I would validate this on the HMRC website because that could go anytime. But usually there's a cap because you want to be sure you're actually earning money before they start to ask you to pay taxes on it. Otherwise, what's the point? Someone earn £20, £30 from selling something on Etsy, and then HMRC will now be chasing them for the 20% tax on £20. It's nothing. They would rather know you are earning something tangible and it's consistent and regular. So if you earn £20 every month and at the end of the year you've earned like £2,000, then you need to declare that. Now, depending on how much you earn, you may or may not need to do a self-assessment. If all your income is directly from your employer and you're earning below £150,000 per annum, you might not need to do self-assessment. Again, always check what is on the actual site. Usually, if you need to do a self-assessment, if you've done one in the past, HMRC might reach out to you to say you need to do another one. If you feel you don't meet the criteria, you can go to their website, which is what I did recently. I went to their website. There's a form there that they will ask you a bunch of questions to check if you need to do a self-assessment. You just answer a bunch of questions, and at the end of the day, they said I didn't need to do a self-assessment. Now, because I already had done self-assessments in the past and I had the whole forms and history and I wanted to retain the history, I told them I wanted to maintain the history, but I want them to remove me from the expectation of self-assessment for that particular tax year. I have my records offline, but I also like to see what information they have about my taxes. So I told them not to delete it, but just to remove me for the current tax year, which they did. So one thing you find out about dealing with HMRC is they're pretty flexible and they're quite reasonable. Always make sure you do your self-assessment as early as you can so that you don't wait till December or January to find out how much you owe. Even if you're not going to pay it till January, just do the assessment and know. The thing is, they send those emails. Do not ignore those emails when they send those emails. If you don't understand what the mail means, reply them and say, I don't understand what this means. If they send you a letter, because sometimes they send letters and there's no one to talk to, but they'll put contact information in their letters. Contact them, call them. I've had to call HMRC before. I had my earphones on and I was listening to the dial tone. After about 45 to 50 minutes, someone picked and I asked my question. I was done in less than 10 minutes. But I got the answer I needed and I was able to move on. The alternative to that, if you need to reach out to HMRC, go to Twitter. They have an account there where every day from 8 a.m. till 8 p.m., they will just be there answering questions. Different people will be asking them questions, they will reply. In some cases, they will get the details of the information, be silent for hours, and then come back after like 2-3 hours and reply that question. But they'll always reply. The only one you need is this HMRC customers. That's the only one you should really be interacting with, HMRC customer support. Everything else is really unnecessary. So that's also quite helpful. And in some cases, it may be just as fast as waiting for them to pick the phone call. So that's another way to reach out to HMRC when you need some information. which takes me to where to get help beyond the gov.uk and HMRC website. If you were actually stuck and you needed help, before I even go to HMRC, I would suggest you start with your employer, see what internal resources are already available. You can actually just ask your HR person and find out if they have any internal resource to help with taxes. You'll find out that some employers actually have dedicated resources on their intranet, for instance. They would have like entire web pages that of who to talk to or what the information is, or they could have a training, for instance, on this is what's changing and this is how it affects you. Find out what's available. It doesn't hurt. You interact with HMRC on your behalf. They more or less determine or know where your tax band is and what may affect you. Aside taxes, this could also apply to other areas of finance management. When I was trying to figure out how to invest in the UK, the person that actually first of all told me about ISAs and tax allowances was someone that I reached out to through my employer. They had some resources about finances and taxes in the UK, but then it was provided by this company, who was an investment company basically, and they had their contact details in there. So I called them and asked for a quick chat. So one thing I found out is you can always find an advisor that would give you 30 minutes for free. It's not from the first day you want to talk to them that they will charge you money. Some of them usually would only start to charge you when they actually start to manage your money or when they start to do your taxes. But you can have a quick call with them just to ask questions, because it also helps them to understand what you need and if their services would actually be useful or relevant to you. So I had this call, and by the time we finished talking, it was just obvious that I just needed to know what the rules were in the UK. So he just told me, okay, if you want to invest this. I never used them because they charge fees for their services and I knew I could get it cheaper. But I was always grateful for that information and it set me on the path to investing. I've reached out to another advisor like that, also from my employer's intranet. It was a mortgage advisor. So start with your employer, find out what's available. If your employer doesn't have any information like this, it's fine. There are tons of resources on the internet. I will leave links to the ones that I use regularly. My number one go-to on the internet is Gov. The second place, like we mentioned, is HMRC on Twitter. It's available every day except Sundays, and they're quite responsive. There's YouTube. The first time I had to fill out my self-assessment by myself, there was a video that did a whole 45-minute walkthrough of the HMRC website. I was basically looking at what it did, and I finished the whole thing. And after that, now I just read it myself and move on. Because sometimes the first time you do this thing yourself, they ask a question and you don't know what that means. They ask you, do you have any foreign income? And you're like, what do you mean by foreign income? Then later on, they'll now qualify it and say, actually, if it is this kind of income, then it doesn't matter. But if it is this kind of income, then it matters. Or they could ask you, you receive income from a company, but are you a director? When did you stop being a director? And you're like, I just work here. So that's the other place I go to. In some cases, it may be helpful to pay a professional. Let's say you are self-employed, you have your own business, you're not collecting a salary, or your income is complicated. So the example we did just now, the person was collecting a high salary, they had dividend income, they had savings interest, and they had bonuses or benefits from their employer. That's not a complicated income. Maybe you are pensioned abroad that is paying you money regularly. If it goes beyond salary, savings, dividends, then maybe you could consider that complicated. The good thing is you could start with talking to someone first before you commit to paying them for a service. I have even paid before because in some cases you just want these experts to validate that, okay, this is how I would have done it, and you want to pay for their time. If you're just unsure, basically you can still pay someone to have a look. You can now use that knowledge in future. One thing to remember, whether you do it yourself or you outsource it or you pay someone to do your taxes for you, HMRC holds you responsible for whatever is submitted, which is why I think it's just worth understanding it, even if you decide to outsource the labor of it. But you should know what the person is doing, and when you see the summary at the end, you should understand how they arrived at those numbers. But whether you do it yourself or you don't, you still have to get those documents and give it to the person that does it. So where do you find professionals you can trust if you decide to pay someone to do this? There are two ways I typically go about it. One, I start with community referrals. We'll have WhatsApp groups that we are in, right? communities where I can trust the other members that they are a bit sensible and reliable. So I put out the question and say, okay, has anyone here had to use this kind of professional, either a financial advisor, or a pension manager, or a tax consultant, or whatever I'm looking for? Does anybody know one that they've used, preferably, so they have first-hand experience of working with this person and they would recommend them? Because it's one thing for you to know someone, it's another thing for you to have worked with them and can recommend them. And then the other place, again, the internet. But there are two websites that I usually go to if I need advice. So one, I check unbiased.co.uk. The good thing about it is you can find consultants there. You can have a quick 30-minute conversation with, even if you're not sure you want to pay them, just to understand, okay, this is my situation. Do they think I need a paid service? Or is this something I should be able to handle myself? The other place I go to, Citizens Advice. Citizens Advice is sort of like an NGO for everything. But the good thing about Citizens Advice is they can link you up to professionals. You see, they have a page here that says Getting Tax Advice. Get advice from tax charity TaxAid. So you have a charity called TaxAid where you can actually find out more if you need help with tax. Basically, all the things we've just discussed. The important thing to know here is the information is available and there are resources where you can find them. And then you should always confirm the brief. Decide exactly what you need them to do for you. If it's a tax advisor, are they going to fill the form for you and submit it? Or are they going to help you with the process? Like what I said before, where I wanted to understand if my way of doing the self-assessment was correct. So I said, okay, you will do it for me, but you will show me how you done it. You will explain it to me. That's part of the agreement we had before I paid them. So if you're hiring the person, how long is it? Is it a one-off? Is it an ongoing annual commitment? Just align expectations from both sides. So make sure you do the following 4 things. Bookmark the official gov.uk pages. Estimate your full year income across all your sources so you know which tax band you fall in. You may not have exact figures for your total annual income, but you should have a rough estimate of where you would fall each year, because that affects everything above your salary. It determines if you are getting any tax-free allowance on interest. It determines what you pay on your dividends. It determines a lot of things. So know which tax band you should be in. Also, try and find out what your tax code is and what it means. So if it says that you're still expecting a tax-free allowance, that 12,500, and you know you shouldn't be, maybe your income amount above 100,000, then that means you are going to get slammed with a tax bill in another year. So you need to watch out for those things. You either plan for it, set the money aside in your emergency fund, or you proactively reach out to HMRC and ask them to update your tax code. We could actually do a full separate course on managing your taxes, but that's not what this is about. What we needed to do today was to give you enough information to give you enough confidence to know what to look for, where you can find the information, and where to get help if you need it. If it's just to do a quick check every year on the HMRC website to see what the rules are, that's good enough.